Welcome to CoreLogic's housing market update for March 2024, brought to you by onthehouse.com.au. Housing values posted a broad-based rise in February, with CoreLogic's National Home Value Index up 0.6%. This was a 20 basis point acceleration from the 0.4% increase seen in January and the strongest monthly gain since October last year. Each of the capital cities and rest of state regions recorded a lift in values over the month, except Hobart, where the market was down 0.3%. Housing values have been more than resilient in the face of high interest rates and cost of living pressures. The ongoing rise in values reflects a persistent imbalance between supply and demand, which varies in magnitude across the cities and regions. Perth continues to stand out with a substantially higher rate of growth compared to any other region, up 1.8% in February, with Adelaide, Brisbane and the regional areas of South Australia, Western Australia and Queensland also showing a consistently high rate of capital growth month to month. These regions are generally benefiting from a combination of comparatively lower housing prices and positive demographic factors that continue to support housing demand. Although growth rates in Sydney and Melbourne home values have levelled out, the monthly trend also recorded a pickup. Melbourne emerged from a 3-month slump of negative monthly movements to record a subtle 0.1% rise in February. Similarly, Sydney dwelling values have moved back into positive territory over the past 2 months after recording a subtle decline in November and December. Potentially, we're starting to see some early signs of a boost to housing confidence as inflation eases and expectations for a rate cut or cuts later this year firm up. The re-acceleration in value growth has been accompanied by a bounce back in auction clearance rates and in consumer sentiment. Auction results and sentiment have both shown an historically strong relationship with housing trends. The rise in clearance rates from the mid-50% range late last year to the high 60% range in February points to a better fit between buyer and seller pricing expectations. A rise in sentiment suggests that households will have a better ability to make decisions around large financial commitments, like a property purchase. Although the pace of gains has shown some uplift, most regions are still recording value growth that's well below the highs of last year, when the national index rose 1.3% in May. Last year's rate hikes clearly dented capital gains, but higher interest rates haven't been enough to extinguish growth entirely. The shortfall of housing supply relative to housing demand is continuing to place upwards pressure on home values across most regions. Housing turnover is tracking higher than at the same time last year, but slightly below the previous 5-year average. Nationally, the estimate of dwelling sales over the 3 months ending February was 4.7% above last year, with the capital cities a little stronger, tracking 6% higher than a year ago. Relative to the previous 5-year average for this time of the year, home sales are actually down 5% nationally and down 1.5% across the combined capitals. However, we could see the volume of home sales picking up later this year if sentiment continues to improve. Growth in rental values has also re-accelerated through early 2024, with the monthly pace of change rising to 0.9% in February, the highest reading since March last year. This re-acceleration also saw the rolling quarterly change in rents rise to 2.4%, the highest since May last year. The pickup in rents is mostly a seasonal phenomenon, with the first quarter of the year historically showing an accelerating trend. However, there's also been a pickup in the annual growth trend for rents, with the National Rental Index up from a recent low of 8.1% in October last year to 8.5% over the 12 months ending February. Adelaide dwelling values are up 1.1% in February, continuing a strong run of growth, where the market has recorded a monthly change of more than 1% through 9 of the past 10 months. The unit market has recorded stronger gains over both the rolling quarter and the past 12 months, which may be an indication that housing affordability is pushing more demand towards higher density options, with values are around $285,000 lower based on the median house and unit value. Adelaide has seen the most substantial rise in dwelling values across the capital cities since the start of COVID, with the market up 55.3%. The outlook for housing values has improved a little since the end of last year, with a subtle re-acceleration in the pace of value gains through the first 2 months of the year. Indicators of a positive shift in market conditions go beyond a lift in value growth, including a rise in consumer sentiment, lower than forecast inflation, and a growing consensus that interest rates will reduce later this year. An improvement in consumer spirits has historically played out positively for housing activity, with higher sentiment generally accompanied by a lift in home sales, and vice versa. Even with the February rise, sentiment remains deeply in pessimistic territory. But given the strong demand-side pressures, we've seen a divergence between home sales and sentiment through 2023. This suggests that any lift in confidence could be amplified amid an ongoing mismatch of housing supply relative to demand. The lower than forecast inflation outcome for the December quarter looks to have carried into 2024, with the monthly inflation indicator showing a further reduction in CPI. The slower rate of growth in cost of living pressures has supported the boost in confidence and brought forward forecasts for a rate cut. Although the timing of rate cuts remains uncertain, lower interest rates could see a more substantial lift in sentiment, but also deliver a boost to borrowing capacity and lower the serviceability assessment hurdle. How sensitive the market is to rate cuts remains a key unknown. We would need to see a bit more than 7 cash rate cuts of 25 basis points each before interest rates return to their pre-COVID decade average of 2.6%. With housing affordability an ongoing challenge and lenders generally cautious towards borrowers with high debt-to-income or high loan-to-income ratios, it's hard to see a material lift in housing values until interest rates come down more significantly. A trend that seems more certain going forward is the sheer diversity in the market conditions that have emerged through the second half of 2023 and into 2024. At one end of the spectrum is the Perth market, where the housing fundamentals look set to drive prices and rents higher for some time yet. Western Australia is likely to be a favourite amongst investors. At the other end of the spectrum is Hobart, where housing values have been flat to falling since the market peaked in March of 2022. In between, we're seeing a range of performance depending on the balance between supply and demand. If you would like to drill into the trends in more detail, you can follow our insights at the research pages of the CoreLogic website.